Brother Will.
Brother Rich, how you doing this morning?
Doing good, man. I'm doing good.
Awesome. Awesome.
Got my son moved into the cottage.
Excellent.
Yeah.
Good to have him back and nearby.
Yeah. And it turned out really well. Next time you're down here, I have to check it out. Next time
Yeah,
you're down
for
here
sure.
learning about the War of Northern Aggression, you'll have to.
Yeah, we still talk about that trip. Matter of fact, my daughter was just on her way through your general area this last weekend. Her boyfriend's in A school down in Meridian.
Okay.
So she and his family went down there for a visit. So uh, they went fairly near Shiloh.
Yeah.
So yep. So we still reminisce about that trip. Had a great time. Enjoyed some brown hospitality.
It was great having you. What school in Meridian?
He is in the Navy. He's a yeoman.
Okay. Okay.
So
Okay. Yeah.
yep.
Meridian,
Very impressive young
Mississippi.
man.
What's that?
Very impressive young man. Very smart.
Mm, sounds like me.
Not like me. Not smart man. I,
Say
I
smart.
just
Pray.
I just operate heavy equipment. That's all I do.
Uh,
So
Thank you to the one person watching us live. Please like and hit that share button, my dear friends out there. What have you been up to? I know we missed you last week. You were stuck somewhere.
yeah. My work schedule went sideways, so it had to call in the A team and have Dr. Fuller sit in for me. It was just one of those days in the airline industry, brother. It just everything went sideways, and so I rolled in that morning about 1 a.m. or so, and
Oh
then
yeah.
by then I was very over caffeinated
Mm.
and couldn't fall asleep till I don't know 3 o'clock or whatever. But it was what it was. So
Now from where you fly out of to where you live? What is that drive like?
about 3 hours.
Okay, yeah,
So
each way.
each way, yeah,
Oh damn,
yeah. My truck
that's
pretty much knows the way at this point.
mm-hmm.
It's not truly self-driving, but it has a mind of its own at times. So it tends to stop at all the Harbor Freights for long romantic walks.
Isn't that weird?
It is, yeah. Yeah. Gotta love GM trucks.
I got the Harbor Freight. They come out with hats. I picked up one of
Mhm.
those last time I was there.
Yeah. I grabbed those mini toolboxes.
Mm-hmm.
Yeah, I grabbed one of those. It's on top of my dresser. It's where I put my watch and stuff like that. So
Tell you what, man, the price difference between that and say Lowe's or Home Depot is extraordinary.
yeah. Yeah, you
And
look at
Harbor Freight's making a killing as
oh
well. So
yeah.
what does that tell you?
Well, it's owned by one of the guys that started Google.
Really? I didn't
He
know that.
bought it a number of years ago and where their growth exploded, it was after he took over. It's he owns it. He owns it. It's not publicly held.
Well, good for him, man.
Yeah. Yep. And people will poo-poo on their tools, and some of their lower end stuff is low end, but
Sure.
you get into even their mid-grade stuff, it's lifetime warranty on the hand tools. And I've did I've done everything in this house. All the remodeling I've done has been with Harbor Freight stuff, tile saws, sawzalls, you name it.
And
So
some of that stuff, even if you use it and you get 2 or 3 projects out of it, and you paid a tenth of what you would have paid if you got you know something better at Lowe's or wherever. I mean, my God, it's worth it. I'm never gonna
absolutely.
may never tile again.
Absolutely. Yeah. Matter of fact, after I've got one more bathroom to tile, and then I'm going to sell the tile saw off. And with what the prices of those have done with inflation, I'll probably get at least 50, if not 75% of my money back out of it.
Oh yeah, sell that baby on marketplace.
Yeah, absolutely. So, yeah, it's well worth it.
Yeah.
So,
Michael Gentili, my good friend, is on. He says, "Good morning, gentlemen. Alan Kelly is coin number 1571 up there in occupied Virginia. Hopefully not occupied for too much longer.
hopefully.
Derek Gibson is on. Says, good morning from North Carolina. And our friend Will Parker is on up there in Montana. Will is going to be one of our instructors coming up at the high risk environment course we got going on down here November the 17th to the 21st. If you want to find out more, click the links in today's show notes or go over to shooting-performance.com. We'd love to spend a week with you. I think I've got 3 seats left, and we've got 4 weeks left. And that's once those 3 seats are taken, I got no more room. That'll be 20, and that's all we're going to put through that. So if you're interested, check it out. If you want to become a coin member like me and Will
Mhm.
and Alan and Will Parker and all the other folks watching today, then you're going to have to take a test drive, check it out, and see if
Yep.
it's worth it to you and your family.
Well worth it. Worth
And without
every
much
bit.
further adieu,
Yeah, let's dive into this. Fear greed index. Fear is running the market at the moment, and it started with it really took a nosedive last week when Trump talked about the Chinese tariffs. Um, you know, usually, they'll say, taco, Trump always chickens out. Read his book. It's all part of his playbook, his standard playbook. And I find it funny, the whole taco thing, because time after time after time, he'll come in and say, we're going to add 100% tariff on here. And then the opponents say, well, he chickened out. It's only 10% now. Well, if he would have started at 10 or 20 even, it's just his style. So
right.
you got to understand where the noise is. He's not a diplomat like say Obama was, who spoke very, eloquently and was a great orator and all those things. That's not Trump.
No.
You got to realize what you're dealing with. He's a blunt instrument. So, I don't really let that stuff bother me. Part of this fear is also this market is, in my opinion, short term, way overbought. Like ridiculously overbought, including gold, silver, uranium. It's all overbought.
Everybody's running to assets, right?
What's that?
Everybody's running to assets, it would seem.
Yeah. Well, and we've had a run. If this month, this calendar month of October is positive, I believe that'll make 6 in a row, positive months, which is almost unheard of, without a down month in there somewhere. So, yeah, the longer you run one direction, the more likely you are to have a correction the other way. So, it's going to happen here. I would expect a 5%, if not a 10% pullback, maybe even across the board, everything. So I've slowly been accumulating a little dry powder personally, not financial advice, to buy said dip. So, but that's how I play the game. You play the game the way you do. So,
exactly.
Yep.
Because it is a game, folks.
It is. And
it's funny. My real quick, my wife and I and our daughter and son-in-law were talking about, he likes to discuss finances and sit down and build spreadsheets almost as much as I do. And he was saying, I was saying, the way I look at it, it's just a math problem. I approach it as such. So much so that when I'm building the spreadsheet, I don't even put the dollar sign on there. I just solve the math problem. And then I go back in, and once it's solved, then I go back in and add the dollar signs. Now I can get emotionally excited about the answer. You know what I mean?
Yep.
But until then, I don't need emotion clouding my judgment. It's just solve the math problem. And I was trying to explain it to my wife and my daughter, like, just look at it like that. It's just numbers on a page. And then we add the dollar sign and get excited about what we're going to do with that surplus.
Yep. Zero emotion. Your goal, and it's tough, and I'm not perfect at it by any stretch of the imagination. Your portfolio is up 10%, down 10%. You should have the same expression on your face. If you believe in what you're doing, that's just blips in the road.
Yeah, exactly. I knew you'd appreciate that, and hopefully folks watching this morning too.
Absolutely.
Tony is on. Mark Hamilton on up there in Canada. Will Rose is on. Says, good morning, Richard Will. Coin number 2269 from Missouri. John Shriver is on out there in Yukon, Oklahoma. Good morning, sir. Coin number 1919.
Good morning, John. Take care of that Mustang.
Yeah, awesome no doubt, man.
Beautiful car. Yeah.
No doubt.
Yep. So, all right. So we can see for green, you see that big drop it took. This is just part of the cycle right now. And we're going to talk about a few things that have got the market spooked here today. And I think there's going to be some credibility to this when a guy like Jamie Dimon, CEO of JP Morgan, who took a hit on one of these things we're going to talk about, says, when you see one cockroach, there's more. So there's some issues out there. They're not like housing crisis size issues or what have you, but it's going to put a ripple through the markets, and we're going to dig into that here momentarily. Because as times were good here for a long time since the pullback in, what was that, 23. The excesses get in there because humans, greed.
That's right.
It is what it is. So right away, we'll jump into that. Billions of dollars vanished Here's the key: low profile bankruptcy rings alarm on Wall Street. I'm guessing a lot of people, maybe some folks watching this, perhaps even you, brother, haven't even heard about this one.
Mm-mm.
The unraveling of First Brands.
Never
First
heard of
Brand.
it.
Yeah, I hadn't either, honestly, until this happened. Now, you've heard of what they make. They own Fram. They own Autolite.
Oh,
Yeah. Um, so they're doing something that is not uncommon in business, but they're having a little issue. So this week, a representative of one of the company's creditors said they're they had $2.3 billion go. Whoopsies! Where is it? Where'd it go? $2.3 billion went bye bye. They don't know
how's
where
that
it is.
possible?
Because it's gone.
Okay.
Yeah. So and $2.3 billion, heck, even it's not, but even if all that was with JP Morgan, they'd go, Tuesday, right? Here's the problem though. It's a little bit rhymes with the housing crisis in that nobody really knows what they're exposed to. Now, it
Yep.
isn't the big banks for the most part. This is happening in the private credit world for the most part. So, private credit, way back when we did a show on this, guys, all it means is you're doing lending, borrowing, or something with someone or an entity who is not a bank. That's
Hmm.
therefore private credit because it's not a regulated bank. So if you ever borrowed money from grandma to buy your first car, or borrowed money from your parents to do whatever, that was private credit technically.
Mm.
Now these are companies that do private credit. Okay. Some, in a very few cases, there's individuals that do it, but for the most part, it's companies that do it, but they do it themselves. They do their own underwriting to whatever level they see fit, and they don't go through banking regulations. And that's completely legal.
Mm.
Okay. You also hear it called shadow banking when they want to put a scary term on it.
Loan sharking.
Yeah. Well, there's that too. So that's a little different because Vito going to come talk to you.
Mhm.
So this is going on through private credit. All right. So if we go to the next one here, we can start digging into this.
Okay.
All right. Unlike traditional bank, private credit lenders say they have the ability to lend quickly because they understand complicated, risky businesses. Not this one though. And they do not worry about repaying ordinary depositors or reporting public earnings. Now there's definitely some credence to what they're saying here, because traditional banks, they got a lot of hoops to jump through, especially post housing crisis with Dodd-Frank and
Oh,
all
yeah.
those rules. You go to buy someplace and they're gonna be like, where'd the down payment money come from?
Mhm.
Tell us where this money, show us the bank accounts where this came from. And that's all from Dodd-Frank. And some of that is a good thing. I think some of it's overdone. Private entities, they don't care. You got the down payment or the whatever they want to see, they can just check the box and move on. So they can move a lot faster. And compared to, say, if you run down to your XYZ local bank, a lot of these private lenders are a much more sophisticated bunch,
Mhm.
and they can get stuff done quicker, and see outside the box, I guess I'll say.
Mhm.
So there's a place for them, but like everything, it can get overdone too. All right, so to acquire Fram, Autolite, and a couple others, they started off making windshield wipers, is where they started at. And then they started financing growth into these other things. They borrowed a lot. Okay,
Mm.
and they did it in the open. And here, open means traditional banking, right? And they also did it in harder to trace ways. Okay, here's where the problem comes in. There's on balance sheet and there's off balance sheet. Now, off balance sheet does not mean fraudulent. Okay. Off balance sheet just means that by law, you don't have to put it on your balance sheet for a publicly held company.
Yeah, but how's
It's
that
legal.
possible?
It's the best tax code money can buy, man.
Really?
Yeah.
Damn.
So off balance sheet just means they don't have to report it. So there's stuff with private lenders. Apparently, they don't have to report that. Maybe Michael Gentili can fill us in on that a little bit.
Yeah, I for as far as a publicly traded company, I'm a little surprised there. Maybe I shouldn't be.
Yep, they can do off balance sheet stuff.
Damn.
So, the so if it's off balance sheet, they don't have to report it. So balance sheet, their publicly displayed balance sheet can look awesome while they have off balance sheet debt, obligations, and things like that.
Yeah, they could be bleeding out their eyeballs in
Uh-huh.
debt. We'd never know about it, and we think it's a good bet.
That's it. Buyer
Damn.
beware. All right. So again, we still haven't really gotten to the problem because if First Brands goes out of business, which
Mhm.
is the way they're going. In fact, I believe they filed Chapter 7. They just went straight Chapter 7 liquidation. Okay.
Oh wow.
Fram isn't going away. Autolite isn't going away.
Somebody bomb.
Somebody will pick them up,
Yeah.
right? And somebody's going to get them at a really good price. So, in the end, the market always does the right thing
You're a
because the
car guy.
market's,
Maybe you could pick up for him.
I was thinking about that. Hey, can I get an off balance sheet loan, brother? A little private credit here, from the Central Bank of Brown.
Yeah, I could
So,
buy you lunch about it.
so I'm going to ask you to read this one off, brother, because I think this one's going to blow your skirt up.
Oh, geez. Already creditors say they have uncovered trouble with First Brand's use of invoices to borrow money. What?
Hmm.
In this form of financing, we used to call it fraud, but okay. In this form of financing, which is not uncommon, lenders provide money that is meant to be repaid when specific realtors send in checks for First Brand products.
All
Whoa.
right. So here's how it works. This is actually pretty common. And it's
It doesn't
not fraudulent.
sound common to the layperson
So
like
this
me.
is it's a cash flow thing.
Mm,
Okay. So they're Fram, Autolite, whoever they sell a whole bunch of filters and spark plugs to Walmart.
mm,
Walmart, let's just say, has 90 days, a net 90 contract
mhm.
with them. Well, the problem is they need the money sooner than that, make payroll, pay their suppliers, things like that. Well, there's about 100% chance Walmart's going to pay that invoice,
Yeah.
right? So what you do is you take that accounts receivable you have and you take it to a bank and say, I'd like to borrow against this because we know this cash is coming in. It's Walmart, right? And I'd like to get a short-term loan against this for 30, 60 days, whatever it is, until they pay their bill. And then I'll give you whatever, half a percent, quarter percent, whatever it is. And the bank says, sure, easy money, low risk. Walmart's going to pay,
Yeah.
right? And this is very common. This is financing account receivable, pretty common. Okay.
I wonder how
You,
that, I mean, really, the nuts and bolts of that. Is it literally somebody calling up a bank and saying,
Mhm.
hey, this is what I got? Let me
Yep.
send you the PDF. It's for, 1.7 million net
Hmm.
90. Let me get a
Yeah.
loan on it. Is it literally like that?
Literally like that.
Damn. Okay.
Yep. And where this usually comes in is if you have a seasonal business. Let's just say summertime is big spark plug season, right?
Mm,
Well, let's say you're coming into springtime. Let's say spark plugs really take off in June. Well, Walmart needs them in May, which means you got to
yep.
build them in April, May, right? You've got your invoice out to Walmart. It's already out, so they've got net 90. Say they have to pay it by I don't know June 30th, let's say,
Mhm,
and you're running low on cash. You got to pay your workers. You got to keep the lights on until that invoice gets paid.
mhm,
Okay. This is kind of the traditional way this is used in my understanding, which is, not great. I've never used this personally when my wife
mhm.
and I had a business, but it can also be if you want to fund, if you're trying to fund rapid growth, I need that cash flow drawn forward so that I
Right.
can use it on other projects or to expand. I need another line making spark plugs or what
Mhm.
have you. And I need that cash flow forward because I don't want to go take out a real loan for it. That's a 7, 8, 9% interest or what have you, and jump through the hoops of the bank. By the time I jump through the hoops of the bank, I'll have the money from Walmart,
Mm.
right? So this is a way to pull these things forward and pay a relatively small premium for that in the sense that the bank is saying, yeah, Walmart's going to pay,
Mhm.
right? So it's it's used,
But
right?
why do all these voodoo accounting practices always seem to blow up? I mean,
Greed, humans.
okay.
First brand grew very fast and acquired stuff. And they were
Mm,
using a lot of private equity, private banking to fund the purchase of Fram, Autolite, whoever else they bought. Okay. So now some of that, here's where the dangerous part comes in. Some of that can be held off balance sheet. So now when they go to an, whether it be private equity, because private equity doesn't just take their word for it. They look, if they go to a bank and say, hey, we need some more cash because we want to go buy, XYZ that makes whatever automotive component, you know, they want to look at those books. So the holding some of that private credit off balance sheet makes their books look better. Okay. And they also supplied components to GM, Ford, so on and so forth. GM and Ford are both saying it's not going to affect their production at all.
Mm,
Somebody's going to pick these. I mean, the the line for the air filters didn't drop off the face of the planet when First Brands
right.
filed for bankruptcy. So somebody jumped in there right away. Okay. So all right. So if we jump into that, that's how you finance it. Okay. And
You read
here's
this?
where the part you were talking about, that other F word, that fraud word comes in.
Yeah. The problem was that First Brands had pledged money from the same invoices to multiple lenders. Essentially
Mhm.
double or triple counting what it expected its customers to be paying according to the bankruptcy filings. Somebody need to go to jail for that. Because these arrangements were held off the company's balance sheets, creditors say they were not aware that the same invoices were pledged more than once. There we
Oopsies.
go.
Yep. There's where your
Greed,
fraud
fraud.
comes in.
Yeah.
So the first part, completely legit. You've got
Mhm.
this, look, you got a big order coming in, or a big payment coming in off a big order, and you just don't want to sit and wait for the cash flow. That's totally legit. Now, this whole, hey, I've got the same invoice. I'm going to run it through 2 or 3 different places, right? So it's not like your house where, if you go get a home equity loan, that gets recorded, right? There's a lien on
Right.
there. The next bank can go find out where you're really at. Not the case here.
This
And
should
this
be
is
a
what they do.
this should be a law against this. I mean,
Oh,
I hate to say that. Oh,
which part?
the part where this off the books stuff. I mean, I
Mhm.
don't have a problem with the invoice thing that you just explained it. Okay, that makes sense to me. I got no problem with the company that I don't. I mean, ask for net 30 if you need 30, but whatever. You want to do net 90 and you need to get the money now. Okay, great. But the idea that you can run it multiple times and it's off the
Mhm.
books, and how
Yep.
can how many other companies are doing shit like this? It's
Okay.
CDOs all over again, kind of thing.
And this is the track that it's taking on a much smaller level than the housing crisis. But you're
Yeah,
you're tracking exactly right. The problem, even during the housing crisis, the problem wasn't when the subprime blew up.
right.
The problem was when the system locked up because nobody knew what their real risks were, and the safest thing
Exactly.
to do was nothing.
Yeah.
That's where this is headed.
Imagine if you're the captain of a shipping boat and a shrimping boat, I should say, but you have lost the ability to predict the weather, and it just looks kind of ominous out there. It doesn't
Hmm.
feel right, and I can't find it with a. It's safer to just stay in port
Hmm.
than take the risk of losing your fleet. It's the
Yep.
same here, and the system grinds up because we've never done a show on it. We probably should. The velocity of money. I mean
Yeah,
that
we should.
because it's not just the volume, it's also the velocity. And when you lock it
Absolutely.
up and it just
Yep.
stops, whew, that's when the bad stuff happens.
Yeah, that's when the really bad stuff happens. Okay. How about you read this one hell here for us, brother?
Trillions of dollars. That's with a T, folks.
Hmm.
Have been plowed into private credit over the past decade, principally from pension funds, endowments, and other groups that rely on such investments to fulfill obligations to retirees and the like.
All right. So let's dig into this a little bit. There's a little more here than meets the eye. Okay, private credit, like we talked about, this just means not a traditional bank.
Hmm.
There's also private equity, which we're going to touch on, even though this article isn't really about private equity. So, private credit first is just basically a private bank. Okay. I'm going to talk about that from the private equity side because I'm a little more knowledgeable on that than exactly how the private credit works. Okay. So, private equity would be um, Rich Brown owns a apartment complex in your area. Okay.
Well,
34,000 units. Okay. You are like the Baron Trump of Tennessee. Okay.
wow.
Yeah. Look at you go.
Well,
Okay.
I'd say for
Now
that.
you go, you know what? I'd really like to cash in on all of this. And I'm going to want to get some investors. I want to get some people who buy shares of this, but I don't want to go public on a stock market because I'm not big enough.
Yeah.
Okay. So now you can do private equity there. And that's where you would go to myself and say Mark and Will and John and say, hey, would you like to buy a piece of this? Okay.
Don
And
and
we do.
Brian have deep pockets too. Now let's get them.
Oh, yeah, you're right. Oh, see, this is why this is you doing this, not me. Okay.
Oh yeah,
All
amen.
right.
Just don't leave any
So
money on the table there.
you go to everybody and you go, here's the balance sheet, here's the cash flow, here's all the numbers. Would you like to buy a piece of this? And it's you can put whatever terms on there you like. It's a 5-year lockup. Your money's locked in for 5 years. You can, here's your expected cash flows going forward. Here's what we predict for the market in this area.
How's this
It's
not a bond? It needs to be regulated because it sounds awful like issuance of bonds.
no, because you have ownership of it. Bond, you own the debt.
Oh, gotcha. Okay.
Here, I and the other investors would each own a piece of this business that is the apartment complex in this case.
I got you. Okay.
Okay. And then the it historically stock market does about 8% a year. Private
Mhm.
equity's been doing about 15% a year. Because
Which
what
is why
private
the
equity
endowments and pension funds and stuff are going in there. They need that. Yeah.
and even more so, they're stable.
Yeah.
Okay. And there's a caveat in there. When I say stable, they just sit there and churn money because the really, really good companies don't go public. They've been going
Mhm.
private equity for the last 15, 20 years.
Mhm.
And the reason for that is these private equity companies, which by the way is where Jerome Powell made his nut, was in
Mhm.
private equity. He's a private equity guy.
Oh, J Dog.
Is they will search out these companies and say, hey, we'd like, while they're still privately held, say, hey, we'd like to buy you. And then they will take them private, they'll leave them private and then sell off shares of that. They will also go to companies that are nearing doing an IPO and go, hey, hold up a minute. How about we give you this much
Oh,
and we'll
wow.
take over? Okay. And then when they've extracted, when they've grown the company more and more and more and made, I mean, 15% is the average, guys. The good ones are way above that. Okay. And then they'll take them public.
Mm.
Okay. Or they'll leave them private forever. Here's the thing though. You can if you own stock in Nvidia, just to pick one,
Mhm.
you can go on there and every second watch what that stock price does, right?
Yeah. Yeah.
Every second the market's open, you
Absolutely.
177.61, 177.42, right?
Mhm.
Private equity isn't like that. It's not openly traded.
Sounds like a black box.
A little bit. I mean,
How is it
it's a
not?
well, it's a privately owned business. No
Unless you're on the
different than
inside of it, it is a black box.
well, yeah, but if you're inside of it, then the only reason it's not constantly updated with its share prices, there's no trades. When you
Let me
see
let, let me say this another way because I really
okay,
need your expertise on this one.
okay,
If I'm considering doing some sort of private equity thing with this, I don't because it is private. I have no idea. I have
mhm.
to. I don't know if they've shown me the books. I don't know how that works. Do you?
Yeah, I do actually. I'm in some private equity.
Okay.
It is I mean I'll say who it is. It's no secret. It's FNRP, First National Realty Partners.
Hmm.
They own grocery store anchored strip malls around the country.
Mm.
The key is the grocery store
Yeah.
is anchored there. I own pieces, very small pieces of three of them around the country, and they're doing great, paying out 9% annually on a quarterly basis. Yeah, doing awesome.
Nice.
Here's the problem though: if I want to get rid of that, I have to find somebody to take it.
Okay.
Okay, because it's private. I can't go on the
Mhm.
open market and sell. Now I can sell it to anybody.
Mm.
Right now, it does have to meet there. You have to meet certain qualifications to invest with them. Um, the I forget where we're going before that. So here's the thing. So how do you value that? Because it's not like a stock where it just gets updated every second on the value of it based on the last trade.
That was
Because
my
there
point
isn't
about
a
the
last
black
trade.
box. How do you know?
Well,
Where's the
then
value?
you got to dig into the books, and in the end, it's a little bit of the wild west in that it's what someone's willing to pay for it.
Mm.
But because let's say I buy my share of the Brown apartment complex, I have to go find somebody who's willing to buy into that, buy
Mhm.
my shares of that. And what's it worth? Depends what it's worth to them. Do you think they're going to drive a hard bargain if they know they're the only one looking at my shares? I would.
Yeah, but if I'm showing you a spreadsheet that says I got 87% occupancy, you're just taking
Mhm.
my word for it. When in reality, there might be nobody in there, or it might not even be finished yet.
Well, there's that, but like on the well, then you're you're delving into fraud. Okay.
Oh, yeah.
B, if I was going to invest in something like that, I could do a site visit,
Yeah.
walk around, show me who's
Mhm.
here, right?
Yeah.
So
And I think
the
that speaking of Trump in his book, I think they talk about that. Him
really,
literally knocking on doors with
mm,
his dad, before
mhm,
they bought stuff. Like, how long y'all been
yep,
here? Hmm,
absolutely,
and
yep,
stuff like that.
yeah, you got to do your due diligence. So,
Mhm.
like I say, it's a little bit of the Wild West. But here's the other thing: if that price isn't constantly updated, it looks stable, doesn't it?
Yes, it does.
Because once a quarter, they go in, they being the private equity company, will go in and say, here's what we value your shares at now. So it looks really stable. They'll like, but look at the stock market. It's up and down. It's all over the place. We just go like this. Well, yeah, only when you're only valuing it once a quarter, once a month, whatever it is, yeah, there isn't going to be any volatility.
But it still sounds like it's guaranteed 15% returns. The people that did that was like Bernie Madoff.
Well, they're not
It's a
guaranteeing that. That's
Ponzi.
what's average.
I know I'm not saying guaranteed, but I mean, it's just consistently turns out 15%. I don't know how they do it.
Well,
It's
they
just an
they they
ATM.
do it because they buy the best companies.
Hmm.
They
Well,
do.
that's what First Brands also said. I'm being able to do this because I'm buying Fram and some other really
Hmm.
serious. Well, it turned out to be it was not a Ponzi scheme, but just fraud, blatant
Yeah.
fraud.
Well, they just outgrew their. They grew faster than they can handle. Right. So the upside. I mean, there's just like who was it? Mitt Romney. They took Baskin Robbins private and
Hmm.
turned that place
You talking
around
about
and
Bain
made
Capital?
yeah, that made
Yeah,
a bunch of money. They're private equity. Made a
yeah,
bunch of money on that. So private equity is legit. Okay.
yeah.
Um, the Now, will there be some cockroaches come out of private equity? For sure.
Just like
Absolutely.
anything.
Because it can be hidden, right? And it's not most people don't even really know what it is, you know.
Hmm.
So there's going to be that piece. Eventually there's going to be some cockroaches in there. Same as there are in publicly held companies.
Yeah.
We've seen it across the board, right?
Let's welcome some folks onto the show before we
Yeah.
go much further. Will we got Don up there in Montana? Our good friend Brian Schuler out there in North Texas. Peter is on from Rhode Island, as
Awesome.
is Cruz. Good morning, brother. Simplify. I got two Rhode Islanders on. Alan Kelly says, I spend my money on ammo and the necessities that go with ammo. Amen, brother. Guy is on from the Philippines. Says, good morning, my friends. Will Wood, good to see you. Ralph Brown, hoorah.
Good to see you, brother.
Michael Chitilli has a question. Says, are you talking about BlackRock or KKR?
In what way? If are you talking about private equity, brother? So
Yeah, I have to
yeah,
wait on that.
yeah,
Dr. Gordon Botson is on. Good morning, sir.
yep. Um, and for whatever it's worth, I just picked up some steel case 9 mil from Midway USA, 19 cents a round with free shipping.
Wow.
So love
Not
my
a steel
steel
case
case.
guy, but
I like it just because I can just run a magnet over the range and pick it up.
ooh, yeah, good point.
Yeah,
He
easy
says
run to get back.
we got most of this state of Rhode Island is on with us this morning.
So
Definitely the
um,
good people of Rhode Island are on.
yep. So let's go back to the previous slide for just a second,
Of
and then we'll
course.
dig into what Trump is doing here. Um, so pension funds and
Yep.
endowments, they're kind of in the same boat. They're between a rock and a hard place. Pension funds are required by law to invest in safe, stable things. Here's the problem. I'm going to speak specifically about the state of Illinois because I loosely follow them because I'm from there originally. Okay. They're in a bad spot. They have promised way more money out to retirees and soon to be retirees than they can ever pay. And because they run their finances like they give drunken sailors a bad name. Okay. Or they give drunken sailors a good name. Okay. Um, they don't have enough money. They've underfunded the pension fund, all these things. They need some killer returns to come back. They literally can't put enough money in there with where their other finances are to get these pension funds back to where they need to be. So, private equity, it's not volatile, right? It just does this because it only gets repriced once a month, usually once a quarter, right? So, it looks very stable, 15% returns on average. This gets us out of our hole. Yeah, well, here's the problem with that. What happens if it does end up being one of the Fugazi ones,
Yeah.
right? Same thing with endowments. Okay. And of course, I'm not going to feel sorry for Harvard or Yale, and they should know better. They should have smart enough people there to only have a piece of it in there, right?
Mhm.
So they're relying on these investments to fulfill these obligations. Are somebody's going to get burned by first brands? Maybe, maybe not. Don't know. Kind of don't care, to be honest. But the point is, it could, if right series events come through, could it hurt some of these pension funds and then therefore hurt retirees? Yeah,
Sure. Absolutely.
absolutely.
It's
So
happened
this is
many times
something.
in the past, folks.
Yep. So, and for the pension funds, I have a little bit of sympathy
Sure.
for the people actually running the fund, not for the politicians who got them there, but for the guy. Some of the people running the pension funds are not money guys.
Pritzker's worth billions and billions of dollars. Let him
Hmm.
freaking backroll this damn
Yeah,
mess.
he's all for giving money away to other people as long as it's not
Exactly.
his.
As long as that's
Um,
his. Yeah.
yeah. So the like in the state of Illinois, I mean, it's like Weimar Germany level stuff.
Yeah.
It's terrible what they've done there,
I
and
can't believe
eventually it's
people
going to
still
bite
live
them.
that freaking place, man. And it's a shame because really it's just Chicago politics. There's a
Hmm.
lot of really good people that live out in the boonies of Illinois that are
Hmm.
probably just as disgusted as what's going on as
Yep,
anybody.
for sure. So, yeah. So there's this is going to come through at some point and cause a problem. How much of a problem we don't know, but it's
Mhm.
something to keep an eye on. Okay, and what's starting to happen, and this is how you know when something is nearing an end, when they make it available to everybody.
Yeah.
Okay. And this is Team Red. This is Trump. He wants to make it so you too can buy private equity inside your 401k and IRA.
Oh boy.
Yeah.
What could possibly go wrong?
Well, you think you're gonna find a bunch of people out there, but you're gonna find some snake oil guys out there, right?
Yeah.
They're gonna show you the numbers from the last 10 years, 15 years, whatever period of time. Okay, hey, that's great. But it's kind of like the gold commercials on TV. By the time you start seeing a lot of them, the run's already over.
Absolutely. Yeah.
Okay. So this is something Trump is doing that I'm like, oh, this is bad. This is really bad. Okay. So I'm taking this to really be a signal that private equity is over.
Yeah.
Now, does that mean that every private equity investment is going to zero? It's not.
No, but once you let the dumb money into the party, it's a wrap.
That's it. That's exactly it. So, hashtag not financial advice. I won't be touching this with a 10-foot pole inside of my tax deferred accounts.
Yeah.
Okay. What's
Don
that?
says Illinois may well be another Orange County, California. They declared bankruptcy back in the 90s. A big part of their issue was the public employee pension benefits. There we go.
Yeah, I had forgotten about them now.
And guess what?
Yep. So, and then you get into the whole kind of state file bankruptcy. Cities can.
You know, that's a great point. And I tell you what, I think if they do, outgoes the governor's cabinet. We set just like you would have a receivership for a
Mhm.
business that goes bust.
Yep.
Now the Fed sent in a receivership to run it until we can get a new leadership
Yep.
set up. Thank you to the 16 folks watching us live.
Yes. Thank you. So, all right. So I'm taking this as if this goes through, not financial advice, and I wouldn't touch that. I mean, if you want to take a flyer with an incredibly small portion of the portfolio, you do you. I'm not touching it at all.
What do you mean if it goes through? Because it's written as an executive order.
Is it? I
Yeah.
think it still has to go through. This tax law has to change, I believe. I don't honestly. I don't know the status of this.
Yeah.
I
Anybody
read this
knows, let
much
us
and went.
know.
I read this much and just went, yeah, no.
Yeah.
Moving on. So
Gerald is on from Oregon. Good morning, sir.
I'd rather go down to the dog track and put my money on the dog that takes a poop right before the race.
At least feel better about myself.
Exactly. So, and have a little excitement as I watch it in real time. Okay. So it's not just your Fugazi places doing this. Okay. It's not just like, hey, come here, Rich. I got a deal for you. It's called private equity. It's not just that. Okay.
Want to buy a Rolex?
Yeah. This
Also
is
got
from
a French
Bloomberg here,
coat.
guys. This is from Bloomberg here, guys. OpenAI, NVIDIA fuel $1 trillion AI market with a web of circular deals.
Mm.
So you want to read this one off for us, bro?
Yeah, boy. A wave of deals and partnerships are escalating concerns that the trillion-dollar AI boom is being propped up by the interconnected business transactions. 2 weeks ago, NVIDIA Corp agreed to invest as much as 100 billion in OpenAI to help the leading AI startup fund a data center build out so massive it could power a major city. OpenAI, in turn, committed to filing those sites worth millions of NVIDIA chips. The arrangement was promptly criticized for its circular nature. Well, no
Mm,
kidding.
yeah. And NVIDIA has been fined for this sort of thing in the past.
But what is a fine, Will? Tell our friends out there in the interwebs what a fine is.
It's just the price of doing whatever you want.
That's right.
That's all it
Yep,
is.
payable by fine means legal for a
Legal for
price.
a price.
Love it.
Exactly. You just put it right in the just put it in the cost index for whatever you're doing.
It drives my wife nuts now that you've enlightened me on that one. I say it all the time.
Yep.
You're speeding. You're going down the wrong way. I'm like, and
Yeah.
if and when they stop me, I'll pay the $40 and smile
Mhm.
and
Yep.
move on.
Have a nice day, sir.
Exactly.
So, what's Alan say there?
Alan says, you would think there are smart people in the higher ed establishments, but look at the way they run their campuses. It makes you step back and say the brains ain't there.
Well, and that's a good point. Smart people get caught up in this stuff because, I mean, doctors are notorious for this. They're
Ooh,
really smart.
you're talking to Gordon Botson now. Easy.
Well, but they're really smart guys, right? But that
Mhm,
doesn't just because a person is smart doesn't mean they know everything about everything, right?
mhm.
It's the old one, the man with money and the man experience come together. The man with experience leads with money, and the man with money leads with experience.
Yeah, exactly.
Yeah. So just because a person is really smart in one area, like a doctor, like a lawyer, like whatever, doesn't mean they know about everything.
Mhm. Yeah,
So,
they're outside their
or
field of
understand the
expertise.
caveats or the pitfalls or what have you, right? So, but you would think that people that smart would be smart enough to go, you know what? I don't understand all this. Let's pay somebody to look at this and say, is this a good idea?
I
But
love that scene in The Big Short, whether he's having dinner with the CDO manager. He's like, I didn't realize CDOs needed a manager, uh, and he's asking Mark Baum, I think is his name in the
Mhm.
movie. He's asking all these questions, and he's like, "Wait a minute, that's terrible." It's like, "No, that's awesome." And
Yeah,
it was just like,
yeah.
he goes, "Well, what? Then I just take it into another one and create another one and just another one and just
Mhm.
keep going." It's like, and
Yep.
whose side of this are you on? Oh, I'm on the side of the angels, basically. Like, God Almighty,
Yeah. Steve
sick.
Eisman is the real guy's name.
Yep.
He has a great YouTube show podcast, the Eisman Report, I think it's called.
Hmm.
He actually has done a couple interviews where he gets interviewed on his own show about what was real in the movie and what wasn't. It's about an hour and a half long. Fascinating stuff. Um, gets into why a different name was used in the movie. Um, but very fascinating stuff. And at one point in there, he asked Steve Eisman asked somebody, "Well, you're, this is gonna fail. What are you doing? You're setting these people for failure." And the banker said, "Yeah, and then we're going to buy it back for pennies on the dollar."
Exactly.
It's a cold, hard world.
Amen. Yeah.
Yeah. So, no, I've never heard of Phoenix Energy, brother.
Yeah.
Sorry, can't help you
That's
there.
just, yeah. I mean,
So,
that's the nature of things. There are
yeah,
people out
and that's
there.
just the way it is,
Yeah.
and well, it's big boy rules. So,
Yeah. I
especially on Wall
watched
Street. I
there was
mean,
not to, but like, every spring here, we have birds creating nests all over our front porch and all of our trees and stuff. And it's fun to watch them. And I noticed that some of the baby birds would fall out of the nest. And I just assumed that it was, oh, they just couldn't fly and they made a mistake. They moved the wrong way. The wind blew the wrong way. And then I watched some documentary films where one bird will decide that he wants the worms mama's about to bring back or whatever and start pushing his siblings out of the nest. I mean, it's a cruel, cold world, but that's
mhm,
nature. And
yep.
it goes from birds to bankers. I mean,
Yep,
it's just the way
absolutely.
things are,
There's
I guess.
one of my favorite scenes in the movie is not what most people would think of as a favorite scene, but they ask him, they asked the guy Ryan, I think Ryan Reynolds played the actor,
Mhm.
or it was the actor who played the character. Said, "How are you going to f us over? Tell us.
Oh yeah,
You're gonna f us over. Tell me how you're going to do it."
yeah,
And he told him, "Here's how I'm going to do it."
exactly.
Because
I
on a
love that
short,
scene.
you buy to cover it at a lower price. So if you sell it in the open market at 100 and it goes to 30, you buy it back at 30 and make the difference. And he said, "I'm going to f you over because I'm only going to pay you 40 for it, and I'm going to make the spread on it."
Yeah,
Okay,
exactly.
all right. Now we all know the deal. Now
He's
let's
like,
move on.
I'll buy it, but I want you to tell me first.
Exactly.
He
So
does.
that's Wall Street, guys.
Yeah,
It's just the way it is. So, and it's if it's in the contract buried on page 67, it's going to stand up.
that's exactly right.
So, all right. So this is Nvidia's. They're running this money around in a circle. And if we go to
Mhm.
the next one,
Okay. Mhm.
there's your
Oh God,
circles, and look at the names in here, guys. Some of them
this looks
I
like
don't
this. This
recognize,
is
right?
looks like kind of the shit that Hunter Biden did with his 80 something
Well,
LLCs.
this is so Nvidia's the cash cow right now, right?
Sure. Yeah.
Right. I mean, they're making money in hand over fist. Their gross profit margin is somewhere above 70%. Okay, they're just creating money.
Mhm.
Okay, and the stock just keeps going up and up and up. But what they're doing here is you can look at this flow of money, and some of these companies like Mistral, Nscale, never heard of those, have no clue who those are, but I know who AMD is. I
Mhm.
know who Microsoft is. You can go right down the line here. Oracle, right?
Yeah.
So this is all running around in a loop. Now, this is not housing crisis, great financial crisis 2.0 because these companies, I mean, this money exists. I mean, Nvidia, there's no two ways about it. We know Nvidia is making a lot of money,
Mm.
right? But here's the problem in in that let's say Nvidia has a hiccup,
Yeah.
right?
Then the
Now what
music
happens?
stops and everybody's looking for a chair.
Bingo. Okay. Now, is this going to bring the whole economy down? No, I don't see that happening at all. Okay. But is it going to make the stock market look like the whole economy's falling apart?
You bet.
You bet it would, right? Because suddenly a whole bunch of people, let's say, you got a whole bunch of people out there with, call options out, levered ETFs on NVIDIA or fill in the blank. You can buy levered ETFs and call options on just about all these companies. All of a sudden the music stops and they got to come out of this.
Mm.
Okay. That's when things will get ugly within this. Now, bear in mind, it's been a while since we talked about this, but we had the Mag 7 for a long time. Right now, you still have about the S&P 10 and the S&P 490.
Mm.
And your S&P 10 is Microsoft, Google, Nvidia, of course.
Well, what
All
percentage is NVIDIA got of that though?
gosh, a lot.
Yeah.
Couldn't tell you off the top of my head, but a lot, right? And then
Everybody
you get
thinks
in.
it's 10, but when you weight it, it's different, isn't it?
It is, absolutely.
Yeah.
So, and Don says, "Can you say .com bubble?" Yep, couldn't agree more.
Yeah.
Could not agree more. And they're starting to see a lot of talk in finance world about are we in a bubble?
Yeah, the
We
AI
are,
bubble.
but here's the thing: bubbles will run farther and longer than you think, as long as one thing happens.
But you know
The
what's
money,
funny? That the
the money is
dot-com
up.
bubble, obviously those
Mhm.
of a certain age obviously remember it and what it did to our portfolios back then. But when mine was just a small one, but it was there and got crushed. But at the same time, the internet didn't go away. It just got
Right?
better and better and better. So on some level, it's a reset because I think even if you say the AI is a bubble,
Mhm.
AI ain't going away, man. It's just Tiger just getting started, right?
I couldn't agree more, and I'm glad you brought it up because I wanted to work that in there at some point. The market, people were right in 98, 99. The internet's going to change the world.
Yeah.
I mean, can you imagine back then saying, "Hey, we're going to do a show over the internet. Anybody can watch it."
Yeah.
Right? Unimaginable, right? When
Right.
you were talking about a 5200 baud dial-up connection, right? The internet did change the world. The problem was the market got it out over its skis, ran too
Yep.
far too fast, right? Gee, that sounds a lot like AI right now,
100%.
right? AI is going to change the world. It's just the market's getting too far out in front of that because of speculation, because of greed, because of optimism, just
Yep.
straight up optimism, right? So is AI going to change us? Yes. Are we in a bubble? Yes.
Can,
But
can I
yeah,
talk to that real quick?
please.
There's a retired Marine general that I respect. That He had a lot to do with my career, and he was being interviewed on C-SPAN or something. They're like, what does the future look like? And he's retired now. He's like, well, it's AI, it's AI. And he's like, finally, the guy's like, well, what specifically about AI? And he's like, I don't know. That's just what they keep telling me. And I mean, a lot of the market, I think, is that way when they're
Yep.
buying these AI, gobbling it up. Like, well, what is this? Well, I don't
Yep.
really know, but I think the market's telling me that right now. And once that gets reset to something more
Hmm.
real,
Hmm.
then we'll be okay. But it's going to
Absolutely.
have a pop at some point.
Yeah. I think it's going to rhyme with it very closely. In fact, I just saw a video last night. It was like some Call of Duty stuff. It's Axon, who makes Taser, has a thing out called, they bought a company called D-Drone, and it shoots down drones.
Hmm.
Because, I mean, how easy would it be to assassinate fill in the blank person
Yeah,
with a suicide drone,
yeah.
right?
Somebody
So
tried to kill Maduro with one and almost got him.
yeah, almost got him. So they bought this company, and then it took me down a rabbit hole. And there's an AI powered heads up display where the one little thing come down in front of the soldier's eye, and they're demoing this, right? There's other drones up. Somebody's shooting at this group of soldiers in this simulation, and this guy can call in a strike from one of their drones where this shooter is identified to be by one of their other drones, and it's all on his heads up display, and he can bring up a little map on his tablet or whatever he's got. It was like Call of Duty stuff, and this was a proof of concept video for
Mm.
this. I mean, you wanna talk about changing warfare,
Oh yeah.
you know? So, yeah, it's gonna AI is gonna absolutely change the world the same way the internet changed the world. It's just running too far too fast right now, but it'll
Yeah.
run farther than what a reasonable person would expect as long as one thing happens, and that's money keeps flowing in
Which is back to
into the
this.
stocks, I mean.
There we
Right,
go.
and here you go. So now it just it becomes a self-licking ice cream cone, right?
Hmm.
Until suddenly the music stops for some reason, right? What will that reason
Yeah.
be? I don't know. Just watch out for it. Could happen today, tomorrow, could be a year, could be 2 years from now. I mean, let's remember from Alan Greenspan's irrational exuberance speech to the top of the internet bubble, the market went up another 100%.
Wow. Didn't
So,
think about that.
you know, so I would caution everybody be ready for something to crash, but don't sit on the edge of your seat waiting for it either every day.
Is that why you were talking earlier that you have pulled back a little bit and gone into some cash?
The and not because of a bubble burst. I think we're just due for a general pullback
Okay.
right now. This one, in my opinion, don't take financial advice from me. This is a buy the dip opportunity when it happens,
Okay.
unless something changes.
Mhm.
Stuff changes. It sounds wishy washy, but it's just true. So,
I'll go ahead and read this.
all
Well,
right,
the companies which ignited an AI investment frenzy 3 years ago have been instrumental in keeping it going by inking large and sometimes overlapping partnerships with cloud providers, AI developers, and other startups in this sector. In the process, they're now seen as playing a key role in ratcheting up the risks of a possible AI bubble by inflating the market and binding the fates of numerous companies together. OpenAI alone has now struck AI computing deals with NVIDIA, AMD, and Oracle that altogether could easily top $1 trillion. Meanwhile, the AI startup is burning through cash and doesn't expect to be cash flow positive until the end of the next decade.
yep,
Whoa.
yeah,
Doesn't Let me say
yep,
that again. Doesn't expect to be cash flow positive until the end of the next decade, but they're burning through money.
yep.
Okay.
And again, it works as long as people keep shoving money into it.
That's just it. They're not going to burn through my freaking money. I'll tell you that.
Yep. So
Although I'm sure I have mutual funds and shit with us, and
you do.
I do. I do. I'm sure of it.
You do. If you own an S&P fund, you own fill in the blank fund. There is no fund manager out there right now, unless it's a very specific fund, like say energy or
Yeah.
something outside of a general fund. If it's growth, income, whatever, there's no fund manager who's keeping his or her job that is not in fill in the blank those
Mhm.
companies. They're not going to keep your performance up where it needs to be without it.
Right. Michael says Deloitte just paid $400,000 settlement and penalties for using AI generated report that had false information and made up a quote as a reference. Damn.
Mm-hmm. So who do you trust?
Exactly.
Nobody. Do your own research. Do your own thing. You know, it's the Wild West out there, guys.
Buyer beware.
That's it. So cold hard world. So what you got here is you've got all these interconnections going on, and like we saw with the private equity. So when these companies start inking these deals and money starts going back and forth, is that private lending? I'd say yes. Right now, I'll say Nvidia because they're the Mac daddy right now, right? Nvidia comes out on their next quarterly report. It says, "Hey, earnings were good, but our forecast for the next quarter, the next year is less than what say Wall Street was expecting, or less than what we told you last time we reported." And they hiccup. Eventually, it's going to happen with one of these companies. It's going to, right? Yeah. And when that happens, what series of events does that set off? Don't know. Do people believe in it enough and see it as a buy the dip opportunity if the stock goes down, say, 20%? Or
and I don't even know at this point, Will, we can call it a black swan event because it seems like it's going to happen. You know what I mean?
This would be the term I've heard that I like is a gray swan.
Yeah.
You know, it's not a white swan. They're not common, right? But it's not a black swan either, because anybody who's paying attention can kind of see it coming. And I would even call the housing crisis a gray swan. It wasn't a black swan event. No. Anybody watching that market, seeing the ninja loans and all that stuff, was like, this can't go on.
Yeah.
Right. So, but the question is when and how much do you want to miss out on in the meantime? Yeah. How much are you willing to miss out on? So
Mark says I can mismanage my own money. Thanks.
And you can do it with the best of them, brother. I got faith in you.
Me and you too, Mark. I'm with you, pal.
So, so the question at that point, this is where it gets into our past discussions about, position sizing. If a person's really worried that, hey, this might be getting close, pull back a little bit. Not like I'm doing right now for just a normal, correction that I think is really overdue. And I shouldn't even say correction, a dip. A correction would be, greater than 10%. I don't really see anything greater than 10% happening. And I stand by to be proven completely wrong by the market yet again.
It's emotions. Who knows what it's going to be?
Yeah. There's no way to know, right? Yeah.
Especially when you got a wild man in office,
Yeah. I mean, he'll say stuff, as we've seen, right? But if a person's nervous about that, I'm not saying if you own, I certainly wouldn't advocate this. If 10% of your portfolio is Nvidia stock, a person doesn't have to go to 0. You can go to 9%.
All right.
8.25%, whatever. Right. So there's ways to manage that risk, take a little money off the table. Right. Let's just say somebody bought Nvidia stock and they're up 100%. Well, pull your original money off the table if you choose to, and play with house money.
Yeah, realize that gain.
Yeah, so play with the house money. If it goes to 0, you're back where you were. Now, my technique, hashtag not financial advice, is let's just say I want to make 12% annually, okay? And right now the market's running hotter than that. Let's just say my target's 12%, and I've had something really run for me, and I'm nervous about it. I'll pull back my original investment plus the 12% I want, and let the rest run. If it goes up even more, well, I'm still participating to some level. And if it goes down, well, I got what I wanted out of it in the end. Right?
I like it.
Or let it run.
Yeah.
Roll the bones and see what happens. It'll work until it doesn't. So, yeah, you do you. All right. So, stock market indicator here, price to earnings ratio, or ration here is apparently I typed it. So this is a pretty simple one. Honestly, this one doesn't matter as much as it used to. And until we get into an environment where market fundamentals really matter again, in other words, money isn't just being pumped in like crazy. Candidly, this one isn't going to matter too much. Okay. But it will, once we get through all this AI buzz, get through this bubble, really, um, then it'll matter again. Okay. So this is a pretty simple ratio, brother. It's a ratio of the price of a stock to the earnings. So if you have a stock that's making $10 in earnings and a stock price of 100, the PE ratio is 10,
Hmm.
price to earnings. Okay. If the PE is really low, that can be, hey, the stock is undervalued. And if it's really high, it could mean it's overvalued. Now, this does vary with industry. Okay. Like utilities have a much lower PE ratio than tech companies because utility companies don't grow at the rate tech companies do. So people
Mhm.
are willing to pay a premium in a PE ratio for a company that has huge growth potential. Make sense?
Yep.
Okay. Let's go on to the next one here and we'll dig into
Good.
this one just a touch more. There's two types of PE, price to earnings. There's trailing, which uses earnings that have already been reported. So it trails today's date, it's behind today's date.
Mhm.
And there's forward PE. So this uses earnings forecast for the future. Okay. When times are a little more speculative right now, people tend to talk more about forward earnings. Here's the
Trailing is
problem.
boring.
What's that?
Trailing is boring. I mean,
It is. Trailing works good when times are just kind of like, meh, things are
yeah.
just droning along. Okay. When
Well,
things are
you really want
going
to make some money? Let's look into the future.
exactly. Well, and the market is a forward looking thing, right?
Yeah.
Because we want to see what's coming. You know, what company is going to be bigger in 1 year, 2 year, 5 years, whatever, right? And that's where we want to put our money now, right? So we use their earnings forecast for the future. Now that's not just the earnings the company says they're going to make, right? You can use that, but Wall Street analysts will say, well, we're going to look at their business and we think they're going to make, $15 a share based on a PE of whatever. We think the stock price should be X, right? Going forward, not today, but in the future. And say it's at $100 a share now, and we think it should be at 150 within the next year. Well, that's 50% gain. Good place to put your money, right?
Hmm.
Sounds good on paper, right? Here's the problem. Companies and analysts can influence current share price by updating forecasted earnings.
Sure.
Okay. You say, well, gee, uh, we need this to go up some more. So we're going to say, oh, we think instead of 15, we think they're going to make 17 a share. Yeah, it happens. Okay. These kind of things are more common when the market's running, when the market's in a bull market like it is right now. Because as the share price goes up and there's optimism about the future, it's easy to keep bumping those earnings forecasts up. It's
Sounds like
easy to
Enron.
find it's easy to rationalize it away, right? Especially when the company comes in and whether legitimately or through accounting tricks makes it
Mark to
happen.
market accounting.
Exactly. So
Mhm.
now, will they? I mean, every publicly held company has off balance sheet debt.
Sure.
I shouldn't say every, the vast majority, and it's
And
completely
you would
legal.
hope it's small, but
Depends on the company,
exactly.
right? So, and these are the things that are unknowable. But during times of optimism, it's really easy to be like, we think Nvidia is going to make. I don't even know what they make per share right now. I have no clue. So I'm just going to make up a number here. We think they're going to make 25 a share, and then they come in at 25.02.
Hmm.
Well, then it's really easy to up your forecast in the future, and then Nvidia's got to go try and meet that, right? Some of it's legit, some of it's not, right? So this is how this game is played. So
I
holy
don't.
cow.
A lot of this is. I don't know, man. I guess I'm just not a trusting soul because some things, commodities, I can look into the future and go, yeah, this is what pork bellies it's seasonal,
Mhm.
or orange juice is seasonal, or gold, or whatever,
Mhm.
silver needed for manufacturing, and
Mhm.
manufacturing works in the cycle. But for some of these companies, man, just to say, well, the future earnings are X, and it's like, really, are they? And Enron was like, yeah, because we broke ground on this power plant in India, and
Mhm.
it's going to be producing so many megawatts. There's no infrastructure to support that. There's nothing but cows and
Mhm.
piles of feces in the field. Nobody's going to use that power if and when it ever comes out. But you're already putting the profits on your books,
Mhm.
and that's what this sounds like. And I don't know.
It can be like that, but this is also where you know whether it's in the end, it's always on you or on me or Michael or Mark or Don as the investor. It's eventually on us. The buck stops with us, right? So how much do any of us really know about the companies we invest in? If you're paying somebody to advise, then they should be looking at this. Here's the problem. There's not enough time in the day,
No.
and you can't pay that. Now, will AI change that? Maybe.
And we're assuming
Right.
that everybody's a truthful actor here. They may not always be.
Absolutely. Yep.
Yeah.
But in the end, as we know, the truth always comes out.
Yeah.
So when things start feeling bubbly, be careful. Like we said, bubbles though can run a lot longer than people think they can. And like you, I think I'm by nature more pessimistic about these things. So it's something I fight. Um, I got out of the market well before the housing crisis hit. I lost out on potential gain there, but it sure felt good when nobody else could sleep and I could.
Yeah.
You know, and now we're with where I am in my life in my late 50s. Um, I'm perfectly happy missing out on potential gain to sleep at night.
Amen.
You know, so that's part of the reason I'm pulling back on my paper gold holdings and things like that because that it's a hockey stick chart right now. Long
Yeah.
term, very optimistic about gold. I just don't want to ride a 10-15% downturn on it.
Exactly.
So,
Which
so
is
I'm just
probably going to happen. It's at what, $4,400 an ounce right
Is it?
now.
Yeah, right in
It,
there.
yeah.
I am more than happy to, miss out on some potential gain. I'm not selling all my paper gold, but I sold some. Realize that gain like we talked about before, and I'll wait for the pullback. And if it doesn't happen until it hits 46 or 4,700, I'm still participating with some of that money
Yeah.
because I was also overweight in it during the run, and then I got more overweight as the price went up.
Mm.
So kind of a rebalancing, and then took a little more off. So we'll see.
Thank you to the 15 folks watching us live. Don says rebalancing your portfolio ought to be a regular thing. Ted is
Yes.
on. This is he's coin number 1461. Wish all security, Mississippi. Good morning, brother.
Yes, for sure. All right. So, what can drive PE up or down? The stock price or the earnings, right? So a change in earnings, if let's just say we're looking at the actual earnings here for this one, the trailing earnings, right?
Mm-hmm.
It immediately affects PE. Earnings were forecast to be 10 on a stock price of 100. Earnings come in at 12. Well, now the PE just dropped, right? Right. So if earnings were $10 a share and the stock price is 100, and the earnings doubled to 20 a share suddenly,
Mm-hmm.
well, now the stock price has to double to get back to that same PE, right?
Sure.
So will it? It depends if it was does the market think that was a one-off or did they substantially improve the business in some sort of way, right? If the stock price, let's say you got the stock price, your example above here is $10 a share in earnings and the stock price is 100. Let's say speculation takes off and the stock price goes up to 200. Well, now your PE went up to 40, right? I'm sorry, 20. Gosh, I can't do math. So do PEs always matter? No. As long as the next one, if I remember correctly here, as long as money's flowing in, doesn't matter.
Mm-hmm.
Okay, this is because I missed last week, so this is from the week before. So this has probably changed a little bit with the fear we're seeing in the market. All right, so this is Bank of America on money flows. Treasuries had an outflow. Emerging market debt inflow. Global equities, $114 billion in inflow in the last 3 weeks, third highest ever. Sound bubblish? Global equity ETFs, $152 billion in inflows in the last 3 weeks, biggest on record.
Mm-hmm.
Tech, $9.3 billion weekly inflow, biggest on record. Financials, bank companies, okay, $3.3 billion in inflow, on course for the second largest annual inflow. Healthcare, $3.3 million inflow. The sector had been on pace for a third annual outflow. All right. Materials, this would be your basic materials, copper, gold, steel, iron, what have you, $5.9 billion inflow. As long as money keeps flowing in, none of these indicators, none of this technical stuff matters. If money keeps flowing in, it's going to go up. That's all there is to it. So
Yeah, it's going to
money
go
flow.
up because I'm telling you, I just sound like a broken record. It just
It
sounds like, I mean, yeah, we just keep printing money and it's just, look, let's just keep going up. Okay.
yeah.
All
Well, it's
right.
like
Well,
we talked about a few shows ago. When they start printing money, that signals typically the bottom of any downtrend. Why? Because eventually that money is all going to flow into stocks, one way or another. It may not go into the stock market, but somebody's going to go buy an iPhone. They're going to go buy fill in the blank, whatever, right?
mhm.
So that money is going to flow into the companies through the economy and be reflected in the stock market in one way, shape, form, or another.
I'll go ahead and take Don's comment here and throw it to you, Will. It
Right?
says, you're talking about the emotional value of money or portfolio. How much anxiety do you feel your investments and savings? The level should help drive your choices. Losing sleep is too high a price to pay, in my opinion.
I couldn't agree
I
more.
think we both, probably all 13 folks watching us today can agree with that. Like,
Absolutely.
my
So,
sanity has a value, buddy.
yeah, absolutely. And to that end, it took me a long time to learn this. Will I own, I don't know, Nvidia, Bitcoin, something very volatile? Okay. Will I own that? Yes. But I keep the position sizing small enough that I can sleep at night.
Mhm.
If 1% of your portfolio is in Bitcoin and it goes down 100%, oh well,
Mhm.
right? So, I think too many people out there think, well, oh, you own Bitcoin, like all your portfolios in Bitcoin. No, that would be silly. Same as it would be silly, in my opinion, to have 100% of portfolio in gold or Nvidia or tech stocks or utilities or name it. It doesn't matter.
Yeah, exactly.
Okay. So if it's the more volatile something is, the smaller position size it holds in my portfolio.
Mhm.
Hashtag not financial advice.
Hey, good morning. Mark. He is on from Australia. Good morning, sir.
Good to see you, sir. So back to our bubble talk here. This is the S&P 500 index. This is the forward PE ratio. Okay. And you can see where we are now on the right side of that chart. And if you take that back, we're not too far away from where we were in 99. Now, when does it end? When the money flow changes, which is why we put that money flow um, slide in there. When those money flows go the other way, this chart will reverse. Until then, not going to happen.
Is there anything with the government shutdown that could affect the money flow?
You know, not directly. In my opinion, the danger to the stock market from the government shutdown is secondary in that we're not getting like jobless reports. We're not
Mm.
getting so suddenly when it reopens, we're going to get this flood of data.
Well,
And
well, how is that any different from the idea I gave you earlier? Like, you're a captain of the ship, you're making
mm,
decisions, and isn't it safer to stay in port because you don't have the radar telling you, i.e., the
mhm.
BLS data or whatever coming out? I mean, but it doesn't seem to be affecting anybody. Hell, we're almost 4 weeks into this thing, and people are still buying. The market's still getting
Because
the pump of cash.
right, because money keeps coming. Let's just say these reports come in after everything opens back up,
Mhm.
and the news is not. It's worse than expected. Now there'll be a big, oh, we got to run for the exit,
Mm.
right? I think we can all agree that the job market is slowing. I wouldn't say we're going hugely negative or what have you. And there's an interesting line of thought inside of there that with reduced population growth and reduced immigration, we don't need to create nearly as many jobs every month. For a
Mm.
long time, the base number was 250,000 jobs a month. But if population growth went to zero, and which it won't, but let's say it does, population growth goes to zero and immigration goes to zero, and we're at full employment, the economy produces zero jobs per month is stable.
Yeah,
It doesn't sound good on paper, but it's stable, right?
true.
And it'll
Mhm.
take a long time for if this continues under the rest of the Trump presidency, then it's going to take a long time for people to get their arms wrapped around that. And you'll hear Team Blue screaming, well, under Biden, we created 127,000 jobs per month on average, or whatever the number is, and Trump is doing this. Well, there's bigger factors at play there. Okay. And I'm not trying to throw shade at Team Red there. It's just math.
Right.
Okay. So,
You mean math? But I've been told by this generation that math could be racist.
well, I didn't say it wasn't racist.
Oh, thank God. Thank God.
I just said it was math.
So let me looking at this
Hmm.
chart here. Okay. You said that it's almost to the 99
Hmm.
high. Okay, let's say it gets there.
Hmm.
Is that an indication that it is a bubble and we can expect a massive correction? Or is
I
it just a data point, one of many?
it's a data point, and it also comes back to as long as the money is still flowing in,
Mm.
then it'll keep running. It's
So
like
we may not see the peak at 24x, whatever.
we may not. It could run to whatever, fill in the blank number. It depends on the money. Whenever something gives that causes the cascading event,
Mm,
right? But if that money keeps flowing, let's say we get up to there and things burp a little bit, okay, and fear starts taking over, and let's just say Congress comes in and says we're going to print $3 trillion to reduce inflation, okay, and we're going to pump that out of the system.
yes.
Well, stock market's going higher, right?
Yeah,
That's
but the
that's what's
value of the
going to
money is
happen,
going and the stock
right?
market's going.
Yep. So, you know, this is where the challenge is holding two opposing thoughts in one's mind. If
Hmm.
they start printing money like crazy, you and I can have a discussion about how this is debasing the currency and gold is the way to go and all these sorts of things while simultaneously buying in the stock market every month because as long as that money flows in, it's going to keep going up.
Yeah. What are your options at that point?
Exactly. So this is where most of society can't get past.
Hmm.
And it's a challenge. I didn't get there until not that long ago in the big scheme of things.
Mm,
Hold those two opposing views in your mind, run your money one way while knowing where the game ends up on the other side.
hmm.
Well, you and I both know where the currency's going,
Oh yeah.
right? But can you simultaneously go buy your S&P 500 fund every month? It takes discipline and it takes a little bit of I don't want to go so far as saying courage because I think that demeans the word courage, but it takes some fortitude.
Mm,
Okay.
sure.
Um, with that knowledge. Now, the people who don't understand the history of currencies and the way, the rise and fall of empires, to use Ray Dalio's terms,
Hmm.
um, they can blindly go buy the S&P 500 fund because nothing's ever going to happen, right? It's going to go on like the loaves and the fishes. It's not,
No.
but it's going to be a long time before it really changes dramatically. So ride it, ride it till it stops.
Hmm.
Okay. And then back to our quick hit on the jobs thing. Um, here's the big problem that our children, and in your case, that sweet
The
little
West
grandchild,
in general.
will face. Yep.
Yeah.
This is your sub replacement fertility rates is here. This is from the Chicago Fed Summit, guys. This is not, you know, fill in the blank, was it Peter Schiff? The guy's always shilling gold.
Yeah.
Um, that guy cracks me up. So you need 2.1 births per woman to maintain a population to account for mortality prior to a person becoming an adult.
Hmm.
Um, here in the U.S., we're at 1.62. So this brings in the whole immigration thing, guys. Um, we have to have immigration. We need basically half a person to immigrate per woman to get us back up just to population sustainment. Now, will AI make this not necessary? Maybe, maybe. I don't know.
I don't know how
Okay.
AI is going to roof a house or, blacktop a highway. You know what I
It
mean? To
it
me,
it
there's
won't
some, right.
it won't do that for
Mhm.
sure. There's gonna be a great future in the trades, in my opinion.
Agreed. Agreed.
However, here's where I just heard this, and it's actually got me thinking longer term about healthcare, buying healthcare stocks. Again, not financial advice. The biggest growth in healthcare employment in the last, I forget if they said 15 or 20 years, has been administration,
Hmm.
data entry, dealing with insurance companies, all that stuff.
Hmm.
AI can do all of that.
Absolutely.
So
White
now
collar is going to get
suddenly,
slaughtered. White collar
yes.
jobs.
So suddenly, if these hospitals, insurance companies don't need all these people, but they're charging basically the same money. Their profits are going to skyrocket. So
And
this
there
is
are
not
things
some.
that, but here, this is close to home for you because I'm sure, and no disrespect to you and your pilot brethren, but I'm sure an
Mhm.
AI could fly a plane just fine. But guess what? I don't want that. I want to know that I got two human beings up in front that have just as much at stake as I do making those decisions.
Mhm.
Can an AI fly the freaking plane? You tell me.
Oh yeah, I mean,
Absolutely.
it's bottom line. At the end of the day, it's just a piece of equipment,
Yeah.
right? I mean, there was a time when they went from a 3-man cockpit to a 2-man cockpit, and that
Hmm.
was, oh, this is impossible. That was automation,
Yeah.
right? And um, at the risk of my own job security, most days, day in, day out, one person could fly the airplane.
Hmm.
You'd be busy. When things start going sideways, though, even with two people, it can get very busy.
Task saturated. Yeah.
Yep, exactly. So, will it happen eventually? Yes, thankfully, it'll be after my time.
I don't. I'm just saying. I don't want to fly on a plane unless there's a human being up there. Period. You
Um,
know.
yeah,
Even though I know, I get it. It's an emotional decision. I get it. AI can fly the plane, and the software, the code that's in there has been
yeah,
doing a good job with few exceptions.
yep,
But no, Gerald says companies buy their employees every month, no matter what.
yep.
Michael
So,
says, how does the delta between the U.S. and the remainder of the world affect your view? Good point.
um, are you referring to the demographics chart, Michael, or in the markets?
Good question.
For demographics, we're actually in better shape than much of Europe is. Um, if we're talking about the market, European markets have done wonderfully, especially in the first part of this year. They started cutting rates before we did, and they took off and did quite well there. Emerging markets, I haven't followed too closely. I've got some money, full disclosure, sitting in uh, Indian stocks. Okay, market, excellent. Um, Indian stocks, because India is the China from the 90s. They've
Yeah.
got they've got the demographics. Even though you see here they're not at replacement value, they have the largest working age population in the world by far.
Yeah.
Um,
Let me tell you what scares the crap out of me about this chart, and
okay.
it should scare everyone. I mean, we'll be dead, but it does have long-term consequences for the world. Africa has 4.0. That's great.
Mhm,
I mean, infant mortality is down. A lot of that used to get wiped out with, the clean drinking water and some of these other things that these children would not see. They would never see adulthood. But now, live births and things, it's getting better. Thank God, right?
mhm,
However, um, IQ is hereditable.
mhm,
And the average IQ in sub-Saharan Africa, where this growth is occurring, is 68,
mhm,
which until they changed it, mentally handicapped here in the United States, according to the DSM, I think as far back as the 70s was 70 and below, was mentally challenged. And they changed it, I think, I forget what it is now, but it doesn't matter. So this is the population that is going to help us out. I don't know. I don't know how that's possible.
Yeah, I don't really see that population helping the world just because put aside everything you said, which is valid, there isn't the infrastructure there to, I don't know, move factories there or move whatever there and then get it back to the
But
rest of
these
the
people
world.
are coming into Europe, though. I mean, and you
True.
look at Europe, 1.41. Okay,
Mhm,
but these numbers, it says, if you read the fine print on this chart, that it does not include net migration.
mhm.
So this is
Yep,
just native population replacement rates.
yep,
So okay, Europe's like, yeah, come on in, sub-Saharan Africans. It's like, well,
yep,
I mean, if you've been to Rome in the last several years, it is sub-Saharan African on steroids, and everybody's running a scam. I
okay,
can tell you from being there a few years ago. So yeah, I've seen it up close and personal. It's not a pretty thing.
yep, yeah.
And
So,
again, I'm not throwing shade on. I mean, hey
right,
man, it's hereditable.
yep,
But for the
it
glory of God, there go I or what have you. I mean,
yeah. So, as we look around this chart, if demographics is destiny, look at China, brother.
I know, right?
1.02. Their population will have in a generation or two. Hmm. You want to
Yeah,
invest
no,
there? Not me.
no,
Not
no,
long
and
term.
that's why I accept India. Look at that.
At least they're close, and they
Right.
already have the world's largest working age population. So, there's something to be said there. And even if we
Japan,
look,
look at that, bro.
yeah,
1.22.
yeah, look at South Korea. There's a
Holy
zero at the
crap.
beginning of that number.
0.75.
Yeah, right.
Who's going to make all
That's why.
those Samsungs?
Well, that's why they're doing baby bonds over there. I
Mm.
believe the number is in U.S. dollars, $3,000 a month. You have a baby, they will pay you $3,000 a month until that child reaches college age.
And people respond to incentives. Hopefully that will correct that.
Yep. If not, South Korea in a generation or two will basically cease to exist.
That's a wrap, buddy. Yeah, turn
Yep.
the last one out, turn the light off.
Yeah, exactly. So,
Damn.
demographics is destiny. So back to Michael Gentili's asking about, how to the delta between the U.S. and the remainder of the world um, in the market.
Mhm,
Long term, it's this. Now, I'll be pushing daisies up before all this comes to fruition, right?
mhm.
But we can play the game in the meantime and watch. Like we talked about, Europe started cutting rates well before we did. Hence, their markets did way better, especially in the first half of this year. Okay, but they've kind of had their run because they're moving towards a recession. They're kind of front running us this time around.
Mhm.
The other places um, I look at India, of course, as I've talked about. China, kind of on and off. That's more of a speculative play. And I honestly, I've pulled back a lot from playing with foreign stuff. Investing, like Brazil has an ETF, EWZ. Okay, and I've played it back and forth. It's volatile.
Mhm.
Mexico, my opinion, I think has some as things as we near shore and friend shore more and more. Mexico has some good possibilities there. EWW, if you're interested in that one, that's the Mexican ETF. Um, you know, it's tough to say out there right now. In my opinion, pretty much the world is overbought at the moment. So I'm kind of pulling back now. This could run for another year. It depends on the money flow, like we talked
Yeah.
about. Money keeps flowing, it's going to keep going up. So, um, man, it's tough to find bargains out there right now.
Yeah. Will Parker says regarding immigration to support birth rate with zero immigration, 100% deportation, will the result of openings in job markets, housing, food, etc., increasing the abundance of resources, give young adults the opportunity to buy houses, get married?
Yes.
Maybe, I'd hope, but I don't
You
see
know,
100%
well,
deportation.
I don't see 100% deportation either. You don't really have to get to 100% to his point to have an effect on the job market and therefore the wages, right? The what I Let's just say we go to 100% deportations and we decrease the working age population in the United States.
Mhm.
Well, then the remaining working age population can demand more money, right?
Yeah.
That increases the quality of life for the middle class overall, right?
Mhm.
So what nobody's going to like is the process to get there,
No.
because when let's say we do 100% deportations, well, suddenly there are going to be legitimate things. It's like, those jobs that the illegal immigrants typically do, your stereotypical ones and non-stereotypical ones, who's going to do those jobs, right?
Mhm.
And let's say it's picking vegetables, throwing roofs on houses, all these things that happen out there. Suddenly, when people can't find a roofer, there's going to be an uproar, and then it's going to be like, it costs how much to put a roof on,
Yeah.
right? And I always get a kick out of it when people say, "Well, it's because Americans won't do those jobs." Yeah, they will.
Yeah, they will.
You won't like the price necessarily, right?
Can I give an personal anecdote, obviously from running a construction company?
Please do.
We had a big project downtown Knoxville, and it was going to be laying a lot of brick, and so we had a crew, but because the visibility was what it was, it was downtown Knoxville. I'm like, I don't want to bring these subs in, even though they got the insurance, they got their LLCs, they're paying. It's just I don't hassle I didn't want, so I'm like, let's see if we can't find some run of the mill Knox villains to handle this. So the only company I could find, a couple white dudes showed up in a broken down old vehicle. They quoted us, and I'm like, okay, do you have your insurance? No. Do you have this? Do you have that? They didn't have anything. They were just working out of their car, and they were going to charge me. And I'm not joking. I think it was like 6 times the amount of this Hispanic crew that had everything. They had the insurance. They had it. And I'm like, you freaking kidding me? And they were much more professional than this clown show that rolled up there, a bunch of hillbillies like myself in a beat up car. And I'm like, go to hell, man. You know, I know the quality of these guys and they have all their stuff. And I'm not an immigration enforcement officer, but I can read their documents and know that they're paying taxes. They're doing all the right things. And, you know, let's go.
Yeah, absolutely. So, you know, will Americans do these jobs that typically are done by illegals? Yes, at a price. You know, people will say, well, you know, up here in Wisconsin, you know, a lot of illegals are working the dairy farms. Okay. You pay me enough money, I'll go milk cows.
Yeah.
You're not going to like if enough people like me are like, hey, I need this much money. You want me to go do that? I'll do it.
Pay
Okay.
$27 for a gallon of milk. How's that sound?
That's what it's going to take. Right. But it's everybody wants, you know, the middle class to have a better life and all these things. And we all want that. Right. But what nobody wants to think about is it's going to mean inflation.
Yeah.
Because that's going to filter through to everything. So
100%.
we love low prices until, you know, it butts up against that reality that if you want middle class America to make more money, things are going to cost more. It's just the way it is.
Yeah.
And we've gone through a panacea time since 1982. Rates have gone nowhere but down, and prices, especially after the housing crisis, inflation stayed very low. While stock market went up, housing market went back up, all these asset prices went up and had very low inflation. That doesn't happen in normal times. And the reason we were able to do that is we exported all of our inflation overseas. Our excess money went overseas. And that's not happening again, guys. Because there's nowhere to export it. There's no China. India can't do what China did back then. They don't have the infrastructure in place yet. They have the population, but not the infrastructure to do it.
And there's a lot of ocean between here and there.
Yep. And China could make things happen very rapidly because if you don't do what they say, they kill you.
Right.
Okay. India doesn't have
that way. No,
right?
no.
So it's the population, but it's also the infrastructure China had politically. I'm speaking about here now. They could force things to happen. India can't do that. So, or doesn't do that. It's not their system, which is great for the folks who live there. But we meaning America, we reap the benefit of China being able to do that in the 90s.
Yep.
And it didn't really get hit on all cylinders until after, you know, the dot-com bubble, 9/11, that time period. We've been reaping the benefits of that for decades, and people think that's normal. It's not. It was a short period in time in history where a confluence of events came together to make that happen. That's not normal.
I want to take on, let's see, Gerald's here says, look at all the ports and investments China has in Africa. So, okay, it's just absolutely true. Low birth rate, high birth rate, lots of minerals and people to work and et cetera, et cetera. Not a lot of infrastructure, obviously, in Africa. And I encourage everybody to watch the documentary Empire of Dust to get an idea of China and Africa. Absolutely worth the hour-and-a-half investment of your time, and it shows exactly what China is facing in Africa. It is a nightmare. So check that out. I mean, it's not far off of the Belgian experience under King Leopold. Of course, they just chop people's hands off. China's not doing that yet. But if they're gonna get what they want out of that place, it's gonna require some heavy-handed tactics, which they're not opposed to. I think even there's talk of them beating their workers over there, these Chinese contractors.
None of that stuff would surprise me with the
Not a
Chinese
bit.
going there. What's Mark have to say there?
Mark says the people looking for work in Queensland are all, and of course Mark is an Australian, are all Australians who have moved out of Melbourne because of all the immigration. All my tradies are coming up from Melbourne. My point being, Australians to work here because of immigration is overflowing the job market down south. Hey, there you go.
Yep.
Yeah.
Yep.
And I think we see some of that. And I think I sent it to you yesterday. I'm in Cracker Barrel right after we left church, and I'm like, Tennessee's closed. I mean, there wasn't a a twangy Appalachian dialect in that place. It was all these freaking Northerners, man.
Mm-hmm.
Tennessee's closed. Get out. We've had
Mhm.
enough. Go back to the problem you created, because as my brother went down to the No Kings protest over the weekend, we had one in Crossville. There's about maybe 100 people or less there. And Jeff just kind of slowly walked through doing a little intel collection. He's like, bro, it was all these Northerners, and they were all talking about, oh, where did you move from? Oh, I'm from Boston. Where did you come from? I came from Chicago. And it's like, get the hell out of here, man.
Mm-hmm.
This is what you're in a red state. If you don't like it, go back to the hellhole you created. Don't come
Yep.
down here starting this shit. I mean,
Yep.
it just pisses me off.
Yep.
You're welcome to come here, but we have a thing going on down here.
There's a reason you came here.
Exactly. Don't forget
Right.
it.
Yeah. So, all right. So now it's time to trigger Brother Brown.
Here we go.
Okay.
Breathe,
This
Rich.
is a quick discussion. Okay. Central banks, the current narrative, central banks are increasing their gold reserves. Okay. I need you to breathe here, brother. Breathe. But have they increased their gold reserves? There's two ways to look at it, right? Like you hold physical gold, right?
Mm-hmm.
I do.
Absolutely.
So there's two ways to measure that gold, right?
Okay.
Ounces and dollars, right?
Yeah.
Okay. So the narrative right now is central banks are exploding their gold reserve holdings. This is one of the things you hear on the commercials, right?
I sure do. Yeah.
Go to the next chart.
Okay. Whoa.
Your blue portion here is the actual net purchases in ounces.
I see what you're saying.
But when the price skyrockets, their reserves have skyrocketed. The
Uh-huh.
value of their reserve holdings have gone up by, 83,000%.
Yeah.
It goes with the price.
Exactly.
So
Okay.
this is more of a word of caution. I'm not telling anybody don't hold gold. I'm not selling my physical gold, okay? What I'm saying is be aware that this is how people who are trying to sell gold are bending this.
Mm-hmm.
It's also how people are saying the end is nigh for whether it be the US dollar, the US economy, or whatever. This is one way they're bending this. What they're saying is true. Central bank gold holdings have exploded in dollars.
Mhm.
But the price of gold has also doubled from 2,000 to 4,000 in what, 2 years
Yeah.
ish, somewhere in there. So the so my point here is a little perspective that yes, they are central banks are increasing their gold holdings in ounces, but the value in US dollars of those holdings are exploding because the price is going up, because a lot of people are finally realizing, hey, this is a good thing to have.
I agree with you. And Dr. Gordon Butson says, I don't think it's ever going to go down. I mean, as long as they keep printing freaking money and devaluing, debasing the currency, and we're talking about giving tariff refunds instead of doing something productive with that freaking money. Now you
Here,
could say, well, yeah, but if we helicopter money in again, it'll just go
Mhm.
back into the economy, keep the skids greased. But at the same time, like there's a reason why people are running to gold.
There is, and it's legit.
Mhm.
And I agree with both of you 100% with one caveat.
Mhm.
Gold will, whenever this AI bubble pops, whenever that is, right? Gold's going to go down at the same time.
You think so?
And if I had the chart handy, I'd bring it up, because if you remember when the GFC started, initially gold went down
It's true.
because people are getting margin called on stuff they have. They have to raise capital to pay off their margin loan debt. So you're going to sell something that isn't going down as much. Personally, not financial advice yet again, that'll be a buy the dip opportunity.
I like
Because
that idea.
then over the next 2 years, in 2009, 10, in that area, gold went up 114% in 2 years.
Mhm.
But initially, it will go down because people need to sell it to raise capital to pay off margin debt, or just whatever else they have going on
Mhm.
for debt. So initially, you'll see a drop in it. That's going to be short term.
Be ready to jump.
Yep, that's my take on it.
Okay,
So,
if we're let's can I put a number on that? If we're rolling
yeah.
4,300, $4,400 an ounce,
Mhm.
what's a dip look like? 10%?
Give me 1 second here. Let me get in my I'm clicking away here. Bear with me. I'm digging back in a chart here to see how much it went down in so gold peaked in September of 2011 at, I'm going to use round numbers here, guys, at 1900 an ounce.
Okay.
Okay. And then it bottomed in, see here, actually, I'm going to look shorter term here. Um, so September of 2011 at 1900, it initially dipped to about 1600, so 10% ish.
Mm-hmm.
And then it came back up. It actually never got back to the highs of actually, you know what? Looking at the wrong
Okay, it was
spot.
$1,600 an ounce in 2020.
Yeah, sorry. Hold on. So in '08, March of '08, it was $1,000 an ounce.
Okay.
It dipped to 724 in October of '08. So let me use my little magic tool here. That's a 28% drop from March of '08 to October of '08. So what, 5 months dropped
Bro, if
20.
I see a 30% drop in gold, I'm jumping on it.
Yep, because then it bottomed at basically 700 an ounce,
Mm-hmm.
and then as the fear set in, so initially the sell-off is to raise capital,
Mm-hmm.
and then the fear side takes over, right?
Mm-hmm.
Because initially the fear is I won't be able to pay off my debt, right? So they sell anything, right? So
Mm-hmm.
that bottomed at 700 an ounce, and then from that October of '08 to August of 2011, it was up 158%.
Well, what do you think about Mark's comment? I mean, he's saying that
Let's see.
banks are going to hold the gold this time despite margin calls. I don't know how they
Well,
do that.
the margin call. So let's say because I trade options, I have a margin account with Fidelity. Okay, I don't. You're required to have it in case you get yourself backed into a corner, but I don't use margin to go buy things. Okay, let's say I did though. So let's say I used margin, which margin is just a loan. It gets a bad rap, but it's a loan. Okay. So let's say I borrow $50,000 to go buy Nvidia stock. Okay.
Mm-hmm.
So the way that works is I always have to keep 20% of room in there. Okay. So a margin call is simply you lose that 20% down, if you will.
Mm-hmm.
Okay. So if that happens, I will get a margin call from Fidelity and say, you need to cover this. And that doesn't mean you have to cover the whole thing. You just have to get back to having 20% of equity, if you will.
Mm-hmm.
Okay. But I have to come up with that capital somewhere. That can be cash I have sitting in the account. That can be I sell something else to raise cash to get that ratio back correct. So the banks don't do that. Does that make sense? I'm
Mm-hmm.
feeling like I fell down in the middle of that.
No.
Okay. So that's the way the margin call works. So the banks can hold the gold and I can get margin called and sell my gold off or sell anything off. They don't care what I sell off. They just want to get that ratio back. So,
Well, Mark says, the Perth Mint stopped selling silver on the 13th of October. And I know that the Perth Mint has done this before.
okay.
And we'll see.
Yeah. So, yeah. So when this happens, I would expect to see, I mean, based on history, that was a 30% drawdown in 5 months. That's people
Mm-hmm.
raising capital. They're finding something that hasn't gone down as much, right?
Yeah.
And selling that off, taking their profit, whether they're taking profit, they could even be taking a loss on that if they bought higher up, but they just need
Mm-hmm.
to raise capital. So the logical thing to do is sell off something that hasn't lost as much, right?
Yeah.
And then pay off that margin. Right now, we are at record highs for margin in the market. Now, some of that is true in the sense that we would think about people are overextended. The other part is the market is higher than ever. So
Mm-hmm.
it's also kind of like, well, look at credit card balances now versus 1984. Well, yeah, everything costs a lot more too. So,
Mm-hmm.
yes, it's higher, but we also need to look at it as a ratio of the market as well. Either way, though, there's a lot of margin out there. And there's hidden margin inside these triple long, these levered long ETFs. There's hidden margin within there. And those saw a huge sell off when the market burped last Friday after Trump's tariff comments,
Mhm.
which is why we saw such a move in Bitcoin as well. Because there is, you think there's leverage in the stock market? Holy cow, look at crypto.
Yeah.
100 to 1 is child's play
No,
in
thanks.
crypto. So, yeah.
And here's the thing, it's not just gold. I mean, Dr. Gordon Watson says, gold's gone 10x in the last 20 years. It's all precious metals are up. Now, of course, they're
Hmm.
not up or like gold is up, but
Yeah.
at the same time, that's one of those things that tells me it's not just gold, it's the value of the dollar cratering.
It is.
Or else all precious metals wouldn't be like or kind of rising relative to each other.
Yep. And then there's also some of them are a play on current events.
Hmm.
You want a metal that's absolutely crushed gold? Look at uranium.
Oh yeah.
It is crushed gold. But part of that's the whole nuclear play because we need electricity for AI and the
Hmm.
electrification of everything. So uranium has just been on a rocket ship.
Hmm.
But you want to bring some volatility in your life, buy some uranium stuff.
That's good.
Yeah. So um, so this is, I mean, everything's going up. And again, it goes back to your point. The root cause is they just keep printing more money. It's
Yeah.
just a matter of where is it going to land at inside the whole system.
Ted says all this gold talk is a reflection of knowing something is very bad in our fiscal and monetary policy. At these levels, nobody's selling their coins. It's a message.
Yep.
Well said, sir. Well
Yep.
said.
In fact, I just saw, and I know we're coming up on 2 hours here, but I just saw, I believe it was a New York Times article, but it was people lined up in New York City selling gold coins, jewelry, lined up outside the buildings down there to sell this off because
Wonder
they're
if they're
cashing
getting
in.
some quick cash to get the hell out of town in case that Mondani or whatever the hell his name is takes over.
Well, the one lady was on there. She was, I don't know, 70 something. Looked like a nice lady. Um, no kids, nobody to leave this family heirloom jewelry to. So she's going on vacation to Portugal. So she cashed in her gold, and according to the article, got about $7,500 and moving on.
Yeah. Or
So
she's going to get a D7 visa and stay in Portugal.
yeah, so it's it's all the rush right now, and every other time we've seen fill in the blank asset go up dramatically, eventually it's going to correct back to some extent, and gold's going to as well. I mean, it's my gosh. I mean, right now, just looking at the chart of it, it's like it's Al Gore's hockey stick.
Hmm.
Really, I mean, big time since August.
Yeah.
I don't have to tell most of the guys here what's. I mean, it's up 27% since August. That smells bubblish to me.
Silver's the same way, man. Back
Absolutely.
5 years ago, me and my friend were talking about buying a monster box of silver, and it's just if you don't know, it's right out of the mint. It's 500 coins, Walking Liberty coins, and they come in a big box wrapped by the mint. And I think it was 14,000 then.
Mhm.
He bought one for 27,000 last week, and right if you try to buy one now, it's at 29,000.
Yeah.
Yeah.
So
Not financial advice, but I
yeah.
don't know.
But it's also a long game too. It was
Yeah.
actually I the business I buy my physical stuff through. Um, my records with them for order history go back through like 2009,
Mhm.
and I was actually looking at it last night. I was buying silver for 11 an ounce at one point in there. You know, Gee, wish I would have done more.
This morning
But
it's 52 an ounce.
yeah,
So if you don't
but you get
follow it real close.
it's a long game, and a lot of gold bugs, silver bugs, precious metal bugs are feeling very validated right now, and rightfully so. You know, but it's been
At
a
some
long
point,
time coming.
it's a math problem. I remember looking in 2020 going, my dad had some money, sold some property, and look, what should I do? I said, buy a few monster boxes and we'll, bury them in a hole in the barn,
Yeah,
It's only going to go up because I just won't stop printing money. They're drunk on it. And
yeah,
they know they can't get reelected unless they just keep
yeah.
freaking printing money.
Well,
And
and
it's
and
going to get
and in
worse.
fairness, what's the other choice?
Take
Depression.
the, exactly right. That's what
Yeah.
probably should have happened with the GFC.
Yes.
Let it float, and they're
Yep.
going to crash, and it's going to suck for 10 years. We'll come out
Yeah.
of it better for it. We didn't.
Yeah. And that's the problem. I mean, it's like that. that quote I told you guys about via text. William White, he worked for the Bank of International Settlements back during the GFC, and he asked a French politician, why aren't you doing these certain things to shore up the French economy? And the politician said, we know what to do. We just don't know how to get reelected after we do it.
That might be the most truthful thing a politician has ever said in history, isn't it?
Yeah, it is. But at least whoever it was, he said the guy's still alive, and as long as the guy's alive, he's not going to tell who it is, which is respectful. But that's all of them, right?
Yeah, it's all of them, buddy.
Yeah, and really, it's easy to blame the politicians, but we need to look in the mirror first.
I agree, and
because if
you taught me that, man, years ago when we started this thing, and you're like, well, you took advantage of it too. I'm like, how clutch my pearls? What are you talking about? What, you want to turn those returns in that you were getting way back when? I'm like, well, no. Well, then basically, then shut up. You weren't that ruthless about it, but you're absolutely right.
Yeah. So I mean, it's
we're all hypocrites at some layer, right?
We are, and we can all sit here and say, well, they should have done this or they should have done that. Yeah, but as the question is posed, name the last time you voted against a politician because they spent too much money. I never have either.
Yeah.
Right. So
until thought about it, yeah.
Until all of us as a group, whether you're team red or team blue, vote for the other team because the one in there spent too much money, even though you're voting for the other team that you cannot stand. Until the American electorate does that, the politicians are going to react to their incentives the same way you and I do.
It's interesting you say that. I'm a wedge issue voter, and so I can never see myself doing that. I don't give, it's almost like as long as, because there's moral things that are outweigh the fiscal.
Absolutely.
Yeah,
absolutely. And we all fall into that, me included. Right. Yeah. I'm not claiming any moral high ground here. Okay. But until we as a society vote out whoever because of that, why would they change?
Right.
Right.
Speaking of why would they change, I guess we can close on this beautiful little quote here. It says, smart people stay poor because they overthink instead of over-deliver. Analysis paralysis prevents action. Waiting for the perfect plan means they never act. Success requires action. Successful people move to action, then improve. That's true. You start, if you've ever started shooting a bow or a handgun or doing jiu-jitsu, it's going to be a long time before you start seeing marked improvement. But if the guys that win, they'll stay with it and they make mistakes and they grow and they learn and they continue to take action.
Yep. And you'll see it across the board, whether it's, trading the stock market like I do and stuff like that. I've made plenty of mistakes. And the biggest mistake I ever made was trying to come up with a perfect plan. Just get started. And if you're not sure about something, like when I started trading options, there's a whole education in there. The market gave me an education, but I started.
You had to pay for it, right?
Yep, absolutely. And but it was a small enough dollar amounts. It didn't affect the family. And now that I understand it better, I do it with larger dollar amounts. But it took me a long time to get past that. I'm a type A guy. There's success or there's failure. There's nothing in between. Yeah, there is. So it's caused me to grow in that way. So
well said, brother.
Yeah. All right. You want to take this out, brother?
Sure. Guys and gals out there in Warrior Nation, thank you for joining us this morning. Will and I always appreciate you being on with us, and just not financial advice, but the fight is coming, folks. Be ready.